Let's welcome in our next guest. We have Soumya Kanti Ghosh, a Group Chief Economic Advisor at SBI, joining us now. Mr. Ghosh, thank you so much for joining us on NDTV Profit. Now, we want to talk to you about what's happening in the economy, looking at the first few set of earnings numbers that have come through, be it for banks or be it for some other players. Now, it seems like the impact of demonetization has not been very severe. You've done a survey on the impact of demonetization 2 months after it was announced. What has your survey shown? What could be the impact of demonetization on smaller firms in the small and medium sector?
See, I think as you have said just now, the impact of in terms of the results, I think it's too early to understand what could be the possible implications on the results which are coming out. So let's wait for some of the results to come out before taking a definitive conclusion. But my sense is that there will be some impact definitely on the earnings in this quarter and also in the quarter beginning January till March. So this is the first thing. The second thing regarding the SME, the small and medium enterprises, yes, there has been an impact, and we also recently did a survey to understand what could be the possible impact on the small and medium sector. We found out that there have been some sectors where the impact could be much more. For example, gems and jewelry is one of them, textile is one of them, construction sector is one of them, real estate is one of them, possibly consumer durables to some extent. So there are some sectors which will be impacted, but the crucial question is how quickly these sectors will rebound. As of now, we are still keeping our fingers crossed and believe that the impact of demonetization could be a little bit temporary and things will get pretty sooner to normal in this quarter itself.
Right. Amongst the respondents you got a response from, those that already have digital facilities with them, they would be less impacted. But what we understand is that there's a long queue to get the swipe machines. So for those who do not have the digital payment interface, for how much longer could they suffer, or have they found new ways to cope?
There are a couple of things in terms of the digital transactions. If you look into the data in November, December, yes, there was a significant increase in the mobile wallet. But I think there are the indications that show that the initial euphoria of the digital transaction possibly maybe little waning a bit. So that's the most important thing. So the next big trigger on digital transaction could be the budget, where the government could actually announce a slew of incentives to incentivize digital transactions. So I think the markets or the people are actually awaiting a clue from that. Regarding the POS machines, I think each of the POS machines cost around 10,000 rupees, and we also recently did an estimates of how much more POS machines the India would require. We found out that as of now there is around 10 to 15 lakhs POS machines. An exactly equivalent number of POS machines, maybe around 20 lakhs or so, could be required if we want to scale up our POS transactions. So that is a cost which has to be borne, and as of now the banks actually are bearing that cost. So I think there could be some sort of an incentive structure maybe built up by the government, where there could be some amount of cross subsidization so as to incentivize the players to buy for the POS transactions, to bring the POS transactions, and also to get those machines, because as of now the connectivity of POS machine is an issue, and also the number of POS machines which we need is still inadequate to carry out the volume of digital transaction which we would like to be done.
Right. So, according to your estimates, now what will be the impact of demonetization on economic growth? We've got the estimates coming in from the CSO as well. Where will FY17 GDP growth finally come around?
We have factored in the GDP 6%, and next fiscal we are factoring a growth of around 7.2 to 7.4%, even though we believe there could be some upside to next year growth. But this year I think the number for the third quarter could be below 6% if we look into the numbers, and the fourth quarter numbers could move up, but it will still be below 7%. So in totality, we will get a growth rate of around 6.7% in this fiscal, but we estimate that there is a possibility that there could be some downside to these estimates, because as of now, it will depend exactly on how quickly the credit growth picks up and how quickly the process of remonetization is over. Yesterday's data, which the RBI has actually released, saying that 9.2 lakh crores of new notes have already been pumped into the system, I think that's a very heartening figure. That means that 60% of the currency has already been remonetized. So at this rate, we are looking in the end of February to be around, the numbers could be anywhere between 80 to 90% in terms of the remonetization. If that is the case, and if the demonetization goes at this pace, I think then the things will be better, will be sooner normal than what we have been anticipating. So in that case, the fourth quarter GDP growth rate, which is below 7%, could see a little more upside. So as of now, there are a lot of moving parts and moving elephants in the room. So we would not stick out and say what could be the growth rate for the next year. But as of now, the growth rate for this current fiscal, we have revised downwards to 6.7%.
All right. So for FY17, 6.7% is your GDP estimate. Now, when it comes to inflation, we got the CPI data also coming in, and it came in at a 25-month low. Do you think we'll see a quick reversal in consumer prices as well if the GDP growth bounces back strongly?
Let me just tell you, go back a little bit over in terms of the inflation numbers. So in terms of the inflation numbers, India has materially corrected from a structurally high inflation country of say around 10 to 11% now to around 5%. So that argument will not go away in a hurry, because if you look into the CPI numbers in totality, the core CPI numbers, which has been remarkably stable over the last 24 months in the range of 4.5 to 5%, critics could actually say that the number is not going down, but it's also an achievement on the part of the central bank to keep it down to below 4.5 to 5%, because at the end of the day, a lower and stable inflation rate is only a concomitant factor for growth stability. Now, in terms of these current CPI numbers, I think the CPI numbers will continue to be on the lower side, possibly till February. You could see a little uptick in March, but the year-end average could be well below 4.5%, and it will be actually in the lower end of the 4 to 4.5%. Regarding your question of the inflation trajectory, I think the trajectory next year is going to be on the higher side. So, and there is also this low base, because the inflation this year has been on a lower base. So next year you could expect an inflation number which could be around close to 5%. But I don't think, and there could be some outliers in terms of the inflation numbers. For example, in the second half of next fiscal, the inflation numbers could actually move up to beyond 5.5% or closer to 6%. But these are all statistical aberration. And I think at the end of the day, we should not bother too much about inflation, even though we expect that the inflation numbers should move up from the current level of average of 4.5% to say around 5 to 5.5% in next year.
Right. Mr. Ghosh, also just wanted to understand that, earlier when the November high frequency data came in, people said that, one cannot analyze these numbers because, it's not the full impact of demonetization. But if you look at the December numbers, electricity generation is up 6%. Port freight volume is up 14%. Domestic air traffic data, which came out yesterday, is up 24%. International travel, visa spend is up close to about 14%. Tax collection, at least on the indirect side, direct side, seem to be slightly better. So the impact is not as high as it was earlier thought of?
Here also there is a catch over there. I think there is both an yes and no to this your question. The yes thing is that yes, the impact of demonetization may not be as severe if you look at the data. But on the downside, most of the data which you are talking about in terms of the air freight numbers, the air traffic numbers, actually these should not be impacted because of the demonetization, because most of these transactions are actually digital. So, for example, when we did the survey, we found out that from the automobile players, and that is reflected in the data now, that they were expecting that there should not be too much downside to the automobile sale numbers, because most of these transactions are actually digital transactions, and there is no reason to believe that these numbers will go down. So this So this air freight, crude traffic may not be a proper indicator of what could be the impact of the demonetization. Having said that, the good thing is that, as you just said, is the tax collections, and we beg to differ from here the market consensus that the tax collection is because of the crude oil price hike, because we dig down into the data to understand that whether it is primarily the oil, the excise duty on oil which is driving the excess collections, or it is other factors. And to our surprise, we found out that the other factors are actually driving these excess tax collections more than the excess tax collections on oil. And these other factors in fact could be that, as you have seen in the data, that there has been a large number of tax have been paid by the unorganized players, the small players. So these numbers could add a permanent upside to the GDP numbers, and in the future this could be a potential source of tax revenue. So there are some moving parts again to this exercise. Some of them are positive, some of them are negative, but our sense is that the fiscal impact of the demonetization will continue to be a sizable chunk. It doesn't depend whether it depends on whether in terms of the cancel liability or in terms of the tax collections which the government collects. But even if the government collects say maybe around say 50,000 crore to 1 lakh crores from this exercise in terms of the tax monitor, I think that will be a sizable number to begin with, given that India has a fiscal deficit of around 5 lakh crores.
Okay, let's then just talk about the results. You and Anisha had a brief chat about the results, but not just looking at the numbers but the management commentary. So LIC Housing Finance, we spoke to them after demonetization. They said that it has a manageable impact on the business. November and December were weak, but inquiries have started to pick up. Havel says that the revenue growth was 13% in this quarter, which was way above estimates. However, margins fell because they had to give a discount. Bajaj Corp, again another consumer company, consumer-facing company, says that wholesaler destocking continued, but they expect things to improve quite soon. You think at least some of these companies' commentary indicate a positive surprise?
No, I expect to believe that, but my only sense is that it will start with a lag. For example, if you look into the transmission rate which has happened now, the banks, for example, our bank has cut transmission by 90 basis points. The rates are at historic low. And if you look at the past data also, in 2010, if you remember, we had shifted from an old lending regime to a new lending regime of advanced lending rate to the rate which we now have moved to the MCLR. So my sense is that credit demand is going to pick up, but it will happen with a lag. So maybe the commentaries of these players indicates that the impact of this exercise could be not in this quarter, which is basically the January to March quarter, but more so in the quarter beginning April. So I think let's wait, but the impact will be with a lag, not immediately.
Let's talk about the budget and what is the expectations that you have. Now, first, of course, the big question. Say if there is a little bit of extra fiscal spending to try and give stimulus, to try and boost growth, would markets and investors be worried?
See, I don't think that investors will be worried in terms if the government gives a fiscal space, because if you look into the history of the developed economies right now, every country, starting from the US, the Australia, every country is now talking about some sort of fiscal space, because monetary policy has run its course and it is very difficult to stimulate the economy in terms of the monetary policy. Having said that, my sense is that the fiscal space which we were talking about, I mean, if you remember in FY14 when the FM presented the first budget, and when he had actually cut the fiscal deficit to 4.1%, the markets were in fact factoring in a deficit closer to 4.5%. This time also, I think the expectations in the market is that the government will not go down to 3%. It will stay on the path of fiscal consolidation, but maybe go a little lower.
Okay, I think that we have an issue with the network. We'll just go back to him. Meanwhile, when we solve the network issue, let's just look at the top gainers as well on the market. So Tata Motors DVR is now the top gainer, 335, 2.3% higher, looking in decently strong. Tata Motors as a stock also has done particularly well. Both the names, Tata Motors DVR and Tata Motors, are doing well. BPCL is the top gainer. Bharti Infratel Idea and Bharti Airtel are some of the other gainers. Mr. Ghosh is back with us. Sir, if you could just start that point again, that what happened back in 2014?
See, in 2014, if you remember, the entire markets were convinced that the fiscal deficit will be set at 4.5% or 4.4%, but the FM went with a deficit of 4.1%. So I think the similar predicament this year is also there. The market is expecting that the fiscal deficit should be closer to 3.5%, if not exactly at 3.5%. So my sense is that it is better to stay on the consolidation path, because we should not give away this consolidation, which the government has been doing very nicely over the last 2 years. But let us stay on the path. Let us make a deficit which is lower than 3.5%. So therefore, that also strikes a balance between growth and economic growth and government expenditure at some point of time, because as of now, growth should be a priority for this government. And one point I want to add to your last question, which you are asking me about when these consumer sentiments could pick up. My sense is that right now what is happening is that people are not spending. So if people are not spending, that means the demand has actually not gone away. Demand is there, but people are not spending because they don't have enough cash. So again, I come back to the point that if the demonetization exercise is through mostly by February and the people start spending, the banks get the money, it will be easier for the economy to recover at a faster pace. So my sense is that the deficit should be a little bit higher than 3%, but could be lower than 3.5%, and that should just stay ball rolling in terms of a budget in this fiscal.
Mr. Ghosh, thank you so much for taking out time for us. Always good to get in the perspective. That was a view coming in from Soumya Kanti Ghosh.